want to welcome our Bloomberg TV and radio audiences. One company that we're watching today is UPS. The company expects sales and profit to grow over the next 3 years. The company outlined its new strategy during an investor presentation this morning, projecting revenue to grow by as much as $114 billion and adjusted operating margin above 13% by 2026. Joining us now for more on this plan is Tomé, CEO of UPS. Carol, thank you so much for joining us. I know it's been quite a busy day. I got to ask, the stock is down almost 8%. Investors not liking it. Why?
Well, Alex, if I could answer that question, I'd probably have a different job. I was really proud of our team today and the outline that we provided to grow our company, our revenues and our margin, and invest in the future. So I'd love to talk about our plans and how we're going to create value over the long term.
So first of all, that was a great answer. Second of all, I think to the point, what some analysts were pointing out was a couple-fold. One is that you're going to have to maybe raise prices in order to meet some of these estimates in a tough growth environment. So I wanted to get your thoughts on that. So give us your thoughts on that first.
I'm happy to. So we divided our growth into 3 different segments: the U.S., international, and then supply chain solutions, with an overarching theme of growth in healthcare. And healthcare logistics is probably the most exciting growth opportunity we have ahead of us. The addressable market, well, it's big, $152 billion, although we're focusing on the complex side of healthcare logistics, which is about $82 billion. Last year, our healthcare logistics revenue was $10 billion. Over the next 3 years, we plan to double that to $20 billion. So that's one way we're going to grow without raising prices. We're just going to lean into an opportunity that values our end-to-end complex logistics network. If we come back to the United States, we plan to grow revenue by about $10 billion. Part of that will come from volume growth, and part of that will come from higher revenue per piece. But on the revenue per piece, don't be confused by the growth there. Part of that is leaning into parts of the market that really value our end-to-end network, like small and medium-sized businesses. And those packages tend to have a higher revenue per piece than other packages. Yeah. We also are leaning into the B2B space, and those packages tend to have a higher revenue per piece. Yeah. And then finally, well, we do tend to raise prices every year. We have something called a general rate increase. Our general rate increase for 2024 is 5.9%. Now, I don't think we'll hold all of that, but we should hold about 50% of that.
I am curious, though, Carol, when you talk about those growth targets and those ambitions, where are those customers coming from? Are they basically with one of your rivals now, and you think that maybe you can sort of poach some of those people? Or are these new folks that maybe aren't really using a shipping and logistics service right now that will now somehow find you at UPS?
So the answer is yes to all above. So if I think about healthcare logistics, it's highly fragmented with tens of thousands of players in that space. We have an opportunity to grow into the space because we have an end-to-end solution coupled with cold chain packaging, ultra cold chain packaging. So we are the best in the world in that, and we can aggregate this fragmented market into an end-to-end solution. If we think about growth outside the United States, the addressable market that we're going after is about $50 billion. And that's held by other players that you can think of, like the largest player in the world outside the United States, for example. So there will be a share shift opportunity as we continue to sell across our end-to-end portfolio. And this really differentiates us from many of the players in our market because we believe in orchestration. Yeah. Because we have an end-to-end network, we can change the mode that you need to ship your product the most efficiently.
So that's the sales growth story going forward. Talk to me a little bit about the bottom line, about margins. You've already been in cost-cutting mode. We've seen at least announcements of some of those layoffs here. What more is coming? What more should investors expect?
Yes. So last year, as you know, the small package market shrunk from where it had been the previous year. And so we looked at that reality and said we've got to right size our business to meet the size of our company. So we did make some decisions to do just that under an operating model of fit to serve. Moving past that, though, is the very exciting opportunity that we have to drive out cost through automation. Do you know that we have over 1,000 buildings in the United States? And many of these buildings were built 50 years ago, 60 years ago. We're 117 years old as a company. And as we looked at the buildings, we said, my gosh, we have an opportunity actually to consolidate buildings that aren't automated into brand new automated buildings and drive productivity. So we call this Network of the Future, which we announced this morning, and it's very exciting. We will have, by the end of our initial phase, we will have 400 buildings that are fully automated. And with this automation, well, we're going to drive out cost. We'll drive out $3 billion of cost between now and 2028, and about half of that will be realized by 2026.
Carol, so the automation doesn't necessarily just mean layoffs?
Automation is automating inside of the buildings. It means everything. Using automation for route optimization, using automation to change addresses, using automation to change to sort packages, of course, using automation to actually put packages into package cars and then deliver it. So it's end-to-end automation. And with end-to-end automation, yeah, there's a productivity opportunity, which means we don't need as many people to move the packages inside of the buildings that we have today. But there's an opportunity for those people to do something else. So as we lean to automation and technology, particularly generative AI, there's an opportunity to move off of the floor of the building and go into the control rooms.
So then going back to the healthcare, well, I guess in general, you had mentioned that revenue targets will include $6 billion of inorganic growth. Where is the priority for that? Where would you like to be spending most of that money?
So most of that $6 billion is in what we call a pipeline. We've been actively looking at opportunities to expand our healthcare logistics portfolio. In fact, we've made a couple of acquisitions recently, one, BOMI, the second, MNX Global Logistics. Both of these acquisitions enhanced our capabilities, particularly in cold chain. So as we think about opportunities going forward, we're going to look for those enabling acquisitions. They're all around the world. It's like a string of pearls. There's no large acquisition, but a string of acquisitions that will continue to enhance our capabilities and allow us to grow. So the number wasn't made up. It's based on a pipeline that we're actively working.
Carol, I do want to ask you a bit of a broader question here, just about the health of our supply chains here in the U.S. As you know, there was a horrific and tragic accident overnight in Baltimore, the loss of life. But of course, now a lot of people looking at the potential economic toll, the need to reroute ships, the need to reroute ground transportation, rail transportation in order to get things off the ship. Is UPS in any way affected by the collapse of that bridge?
Well, our hearts goes out to those who were affected. It was just a horrific accident. We have checked in on all of our UPS folks in that area, and all of our folks are safe, thank goodness. Because we do have an end-to-end global supply chain, we can reroute products to different ports around the world. We can also move it off of the air, off of the ocean and put it into the air. We'll help reroute the world. We do this as a matter of course. We can.
And so for the customers your existing customers that depend on you, depend on UPS, and more importantly, the folks at the end of that line who also depend on getting delivery of those things for medicine and other things that are critical here, what type of disruptions, if at all, should they expect?
Well, I can't speak to the specific accident because I don't know the cargo on the carrier. But when it comes off the carrier, we'll help to get it routed. And because there'll need to be a repair, obviously, you can reroute ocean freight to ports like in Savannah or up the Northeast coast. So we've got a presence everywhere, so we can assist in that.
Carol, before we let you go, sort of staying on the macro theme, what's your take on the U.S. economy? How are we doing?
So from our perspective, the U.S. economy is very resilient. And the good news from a year ago is that inflation rates have come down because inflation actually had an impact to our business, a negative impact. Think about this. When inflation rates were 6% or higher, particularly in the area of food, more and more consumers' wallets were going to food purchases, and those purchases, well, they don't ship through our small package network. So as inflation has come down now to 3%, and the Fed has indicated it's on its way to 2%, that's better news for us because more dollars can go into goods rather than just food. But it does appear to be a resilient economy. And if I look outside of the United States, candidly, we're seeing some green shoots coming out of the China-Asia trade lane, particularly as it relates to the softness that we saw a year ago.
Carol, we really appreciate you taking time to be with us today. I know a very busy day for you as you really try to sell the UPS story. Carol Tomé, she is the CEO of United Parcel Service.